Welcome back. It's been a manic week. We may as well start with Pick n Pay. On track for the great unbundling, some kitchen sink impairments, and a mighty performance at Boxer, which is firmly carrying the can. They should just list Boxer and close everything else down.
You know, I was discussing it this morning because the total market cap of Pick n Pay is about 11 billion now, 12 billion.
The cash
They're going to have a 4 billion rights issue. You know, what happens when they split the two? If they do split the two, you know, what's going to happen to one of them? They're both going to be very, very small retailers, probably the size of Lewis or something like that, you know. No, I mean, if you do the numbers, that's
there's Shoprite at what, about 150?
I'm concerned about the dilution, you know, and also the share prices going up and say, okay, at what price will shareholders be prepared to take such a big dilution? You know, in other words, from 12 billion, you're adding another 4 billion. So there's almost a 25, you know, that's a third, but I mean, it's when you add it up, it's a 25% dilution.
But isn't it better to have a smaller company which is profitable and growing and has good prospects? So the Pick n Pay of what it was is gone. It's not coming back. And you build something else from the wreckage.
So what are we going to call it?
Boxer.
The one we're going to call
Picky
it
and Pay.
Boxer. The one we're going to call Boxer.
Call it Boxer because that's where the money's coming.
No, the thing is, the shareholders are going to go where they see value. So if by unbundling that, you're giving them that opportunity. So let's see what happens if the unbundling does.
Yeah, because Boxer had 18% growth. I mean, that knocks Shoprite out of the park.
You've got two management teams in, eh?
Yeah, but then it's also becomes a target
for distribution centres. You've got two. Everything is different because if it's truly independent, or if it's
maybe they do some shared central services or something.
Or maybe Pick n Pay shuts down as a brand.
I don't know.
Yeah.
Can't see that happening though.
It can happen if, you know, Boxer decides
we've
got a lot of
reverse takeover of Pick n Pay.
The dislike of Pick n Pay by the consumer out there. I did a TikTok-y thing, and I was actually talking about valuations of Pick n Pay. But that video has had hundreds of thousands of views and thousands of comments, and every comment is people hating on the Pick n Pay experience.
There you go.
And that just sums up everything. And
we've got a lot of companies in ICU still, from Transaction Capital to Pick n Pay to you name it, Cecil.
Yeah.
Let's keep going.
Well, speaking of ICU, it was also the turn of the two hospital groups to release their results this week. The market loved life, very lukewarm on Netcare. Here are the two CEOs.
We feel that we can still see paid patient days grow. It's probably a number closer to 2%. We think that occupancy levels will be around about or just above 70% for the full year through to the end of September of 2024. We have got clear plans from an expansion perspective and capital commitments, which we articulated in detail in our presentation for the growth in our domestic business. And spreading our eyes further afield.
We've been under pressure from a volume perspective, there's no question about it. But the standout feature is that because of our digitization strategy, and we're 6 years into a 10-year strategy to transform the way we deliver health and care, we've been able to demonstrate very significant efficiencies, notwithstanding lower volumes. And we've been able to show very good operating leverage. So whilst revenue might have only increased by 4.3%, we were able to increase EBITDA and operating profit to almost double that amount.
He's not wrong. I just can't get excited.
I've been in Netcare in the hospital.
Yeah.
You know, they haven't got those big sheets anymore. They just walk around with iPads.
Actually, that's
which
right.
makes it a huge difference. You know, and I can understand where they're going and what the efficiencies that they introduce. And even when you register, you go in there. It's all done digitally. You can register ahead of time. So I think it makes things a lot easier. Sure.
You're very optimistic on local hospitals.
No, I'm not. The only thing I don't like is when Peter Wharton-Hood starts talking about an increase in patient day. That's what you call in Yiddish, like the Malchamovitz. You know, you're hoping for the evil angel, you know, to spread death or to spread destruction. No, don't do that. You know, just you want patient days to go down.
No, you don't. Not if you're a hospital.
Maybe
you were talking about sick, I don't know, liposuction or facelifts or something.
Yeah, let's talk about, you know, if you put the South African hospital operators, side by side by, S&P 500 listed, the likes of United Health, HCI, and other, Cerner. You just go down the route of, that, I don't know, man, in dollars, you've lost so much money. So much money.
Look, I've never...
And it's been turning around since 2016.
I've never liked the healthcare sector. I just think regulatory risk, except for the Oaks. Who those Oaks who make the beds and stuff? Skylar. Striker.
There you go.
Apart from them. Yeah, they're nice. Otherwise, not so good. As for those who profit from the power crunch, what now? There's the relentless electricity. Has Reynard on their strategy.
When it really focuses on the commercial and industrial market sector. So that's really businesses from about 1 megawatt up to about 40 odd megawatts worth of energy that they need. So it's not the small end. We don't play really materially in the residential and small commercial in any real way in our solar energy business. So we play in that C&I space. And those are primarily businesses, and they are buying renewable energy for reasons differently to what you or I might do at home. They're looking at what the rates are going to be from Eskom going forward.
It was nice. I do too. I mean, really strong cash. They had a problem with Nashua where stuff got caught at the harbour. But strong cash generation, all their businesses, defence, massive order book going forward, cabling, all of it.
It's always been a good business, from the Bull Pretorius days and that. It's nice to see them coming back again.
But it's spent a bit of time in the wilderness.
Yes, I know.
A long time.
A long time in the wilderness.
Well, there was no infrastructure spending. We started to see that come
back.
Yeah, but it's coming back. I like that.
I bought my Rooinerts at about 56 rand.
Which came out, you like?
I think I bought my Rooinerts when they were about 56 rand, so I feel quite smart.
There you are.
Rare moment.
That is smart. Yeah.
No comment. Good for you, though.
Well, at Colonel Saunders' headquarters, things are still as tough as an old bird, and Chris Gitter says margins are paper thin, but you can't keep an old cockerel down.
We're still in a debt situation. We recovered well from over R1 billion of debt, the first time in our history, to a facility of 400 million approximately. So there's been a big improvement, and in a volatile business like poultry production, you don't want debt because it can easily have a negative spin on the business when you get these external factors. Very cautious on capital, so over the next 6 to 12 months, the focus will still be on recovering our balance sheet and strengthening that.
He's one of my best CEOs, simply because of his resilience. I mean, he is unbelievable man.
He's probably 23 years old.
But he's gone through.
Yeah. But I mean, and he runs a good ship there when he can. So I chatted with him, and there were two things asked. One about, what about vaccinating the birds? Apparently you can, and there are vaccines, but you need approval and all of that, etc. And then I said to him, what's the ideal margin? And he's like, they're at 2.5. He says it should be 7.5.
Sure.
That gives them, so that's how far they think they are off target.
Off target, sure.
Yeah.
But I don't think introducing tinned chicken is the solution here. It sounds like blasphemy.
I don't know.
The whole point of chicken is that chicken is cheap. So now when you
but someone's been doing those walkie-talkies, and they've been doing very well.
No, walkie-talkies, yes, but
cheap tin chicken.
How do you tin a chicken?
It's disgusting, man. That's like the low point of South Africa currently. We're talking about tinned chicken. No. Scratch that.
With you.
Go back to
I don't even like chicken.
You can
I'm
probably
sorry.
use it in a stew. Do you have an aversion?
No, I'm just offended because chicken is meant to be cheap anyways. Just make the chicken.
But I'm with you.
You know what? I'm with the Brazilians here. They should be winning.
Yeah.
Yeah, we shouldn't. No ways.
This is not a patriotic moment.
This is a capitalistic moment.
Okay.
Let the winner win. No,
I'm not sure with all the diseases that are around chickons. I think got to be very careful. Anyway,
exactly. That's the whole point. How is it going to be ISO 10,000 compliant? I don't understand it. It doesn't make sense.
No tin chicken for these guys. The jury on transaction capital, however, is still out.
I think that the entire losses that the group is reflecting relate to SA Taxi, and it's not like that. It's not that we are trying to deflect from that. When we say to shareholders, one has to look at everything that has gone on in the year, because in the 6 months, because a lot has happened, and it's all relevant. But at the end of the day, one can't shy away from the fact that SA Taxi is still a business in distress, It is a business that has made remarkable recovery, and we have worked extremely hard to reposition it and make sure that it does have long-term relevance in the taxi industry.
I like that loss narrowed from R2.22 to R1.72. What's the share price about that?
I haven't looked at the share price for some
I had a
time.
look today.
Yeah,
it's around it's about 260 at the moment, but it is. I mean,
well, you've got to dig yourself out of the hole. So what do? You can't just say, okay.
Well, you could. Business rescue.
Yeah, but you don't want to do that. You've got to fight your way back.
I've got no view on this. It's such a difficult industry. It really is, made up of so many different players at so many different levels. You know, if ever you spoke to David Hurwitz when he explained it to you, you know, they're all going for the top end of the best routes, but along the way there's so many other areas that are difficult to handle. Some things like the chickens you just stand back from. You know, this is
the tin chicken.
Tin chicken.
You're going to buy them tin chicken for their Christmas.
No,
tin
thanks.
turkey for Christmas. No. Okay. No. And finally, sticking with weird things to add to the Guinness Book of World Records is one devoted pop music fan from Kansas who has added a record-breaking 18 tattoos of Madonna on her body, taking the title from a British woman who has only 15 tattoos of the rapper Eminem. I like Madonna.
Eminem.
Eminem. But like 18.
Why Madonna? How old is she now? She must be in her 60s, near 70.
Are you being
Madonna.
ageist?
Yes.
Well, you could have Madonna from her glory days.
What was it
I just
called?
think 18 tattoos. Like
She published that one porno book right at the end, remember?
It's called Sex.
it was called sex. It wasn't
sorry.
porno, it was sex.
Well, you got to that defines. You know, you got to define what porno is.
Having a lot of those tattoos on your body can be an interesting experience for everyone else, I suppose. And that's where we leave it. David Bright, thank you for your contribution. Have a good evening and a great weekend.